In this interview, John Berardino, president of Griffin Capital Funding, shares what church leaders need to know heading into 2026. Let's get started. John, Griffin Church Loans have been serving churches for more than 26 years. What continues to drive your mission after all these years?
All right, thank you. Yeah, you're right. We've been in operation for 26 years, and we've closed over $2 billion in church loans in many parts of the U.S. The same thing drives me today that drove me when I founded the company so many years ago. And that's my love of helping churches. I love to see them grow, to succeed, to see Jesus spread throughout the land, and to help communities and to foster the growth of churches because they have positive real-world impacts on people that they serve. And that continues to drive me today.
Looking back, how would you describe 2025 for churches financially? What stood out to you most about this year?
Thank you. Interest rates are high, and it's been difficult for churches to borrow as much money as they've needed to do some of the projects that they would like to do. So higher interest rates. The good news is they're starting to come down. And remember, you're not borrowing the money for life. A good way to think about it is when you take out a loan, you're renting that money for a period of time. And if during the term of your loan, the interest rates drop, then you can refinance and get a better interest rate. So really the big thing that stood out is the high interest rates.
Interest rates have been one of the biggest challenges for everyone. How should church leaders think about loans or refinancing when rates feel high?
Rule number one is, if you don't have to refinance your loan and you have a lower interest rate than the interest rate is today, don't refinance your loan. However, if your loan is coming due and you have no choice, you have to refinance, your loan is coming due, then refinance, and when rates drop, refinance again and get a better rate. The rates are coming down. We expect in 2026 that they'll come down another point, maybe more. So think of it as you're renting money and you're not borrowing for life and stuck in a high interest rate loan.
You've seen thousands of church loans over the years. What are some lessons that consistently stand out? Things that make the biggest difference in successful projects?
Okay, that's a big question because there are a lot of different types of church projects. So why don't I, since this is a short video, why don't I cover two? One is general, meaning when a church is looking to borrow money regardless of why they're borrowing the money. Understanding the purpose of the loan, whether it can be afforded or not, and preparing for the loan and getting buy-in from church leadership and the members of the church. Making sure that you're planning properly for the loan. You can afford it, people are behind you, and its purpose is worthwhile. Secondly, construction loans. I see a lot of issues and have for the past, 26 years since I founded this company, and before that, when I worked for other church or other companies that did church loans. So in terms of construction loans, the big issue that I see is, they'll go out to a builder and they'll go to an architect and they'll have plans drawn up and they'll have quotes given to them. And then they'll come to me with a project that's $10 million, but the church brings in $100,000 a year. It's evident they have no clear understanding of how much the loan payment is going to be and whether or not they can afford it. And there are many times I've seen churches come to me and they've spent a ton of money having architectural drawings done and hiring people to do studies, only to be told there's no way you can afford the loan at this time. So understanding where you are now and what you can afford to borrow is the first step. You should be going to a company like ours, and of course I recommend Griffin Capital Funding. We're the best. But you should go to anyone first and find out how much you can afford to borrow before you go to an architect, before you go to a builder, before you pay anyone anything in regards to borrowing money.
Church financing is very different from commercial lending. What makes it unique? And how does that shape how Griffin serves pastors and treasurers?
Church loans are a type of commercial loan. But you're right, they are very different. One is to a for-profit entity, a business, and the other is to a nonprofit entity, a church. And the mission of a for-profit business is to make a profit. The mission of a church is to win souls for Christ. So they are absolutely different. And the management of the organizations is different. The purpose is different. One is attempting to take care of themselves, their family, the families of the people that work there. And the other is attempting to steward people towards Christ and living like Christ. So we don't do loans to for-profit entities. We only do church loans. But in my past, in my career, I have done many commercial loans, and I did used to do them. But to answer explicitly, what are the differences between the two? There are not generally very many differences in terms of structure. So they're structured pretty similar. Now, one of the things that we do for most of the loans is they don't have personal guarantees for our church loans. Now, as you know, many traditional lenders require personal guarantees of either the pastor or church leaders or the board or whomever to make the church loan. Whereas in commercial loans, they almost always require the personal guarantee of the business owner. So that's one way they're significantly different. But really, the purpose of why the loan is needed is generally the biggest difference. One is in furtherance and support of a nonprofit, and the other is in furtherance and support of a for-profit business.
As churches look ahead to 2026, what would you say are the smartest financial moves they can make right now?
Get your records together, make sure you've got your financial statements in line. If you've got a loan currently and your loan was taken out in the last 4 years or so, 4 or 5 years, you're probably going to be heading into a cycle where interest rates decrease. It's not guaranteed. But that's certainly what looks like 2026 will hold for us. And you want to be in a position to be able to take advantage of those lower interest rates. This is also going to be a great opportunity for those churches that have been looking to expand or build new buildings or whatever the purpose might be, or buy another location or whatever. Obviously, the lower the interest rates, the lower the payments, and the lower the amount of interest you pay on the loan. And that's really the important one, isn't it? So for 2026, be prepared to take advantage of the decline in interest rates.
If you could leave pastors and treasurers with one message for 2026, what would it be?
Be prepared. Be prepared to make good decisions and get organized. put your financial statements together. If you don't know how to create financial statements, the good news is at Griffin Capital Funding, we have free forms you can use to create financial statements. And you can contact us and we'll be happy to send those to you. I'm John Berardino, and I'm the president of Griffin Capital Funding, and we've been in operation for 26 years. We've closed over $2 billion in loans to churches and more than 2,000 church loans. And I want to thank you for taking time to listen to me today, and we look forward to working with you.